Welcome to today's lesson. Welcome, students. Today, we're diving into an important topic that forms the backbone of every business. We'll be covering the following areas. 1. What is business documentation? 2. The history of business documentation. 3. Importance of business documentation in today's world. 4. Why document business transactions? 5. Types of documentation, external and internal. 6. External documentation in business transactions. 7. Internal documentation in business transactions. 8. Role of the accounting system. To start simply, documentation is the organized collection of records, reports, and written materials that capture everything happening within a business. It's essential for keeping things running smoothly, making informed decisions, and staying compliant with laws. Let's explore how and why documentation is so valuable. What is business documentation? Business documentation refers to the organized collection of all records, reports, and written materials that document various aspects of a business's operations. These documents provide a detailed record of a company's internal and external activities, helping to facilitate business operations, ensure compliance with legal requirements, and maintain a clear communication framework within the organization. Business documentation includes a wide variety of documents, such as financial documents, invoices, receipts, ledgers, financial statements, e.g. balance sheets, profit and loss statements, and tax filings. Legal documents, contracts, agreements, licenses, and compliance records. Operational documents, business plans, strategic plans, policies, and procedures. Human resources documents, employment contracts, payroll records, employee evaluations, and training materials. Marketing and sales documents, sales reports, customer contracts, advertising material, and market research reports. These documents are critical in helping businesses record and communicate their transactions, manage operations efficiently, and ensure transparency and accountability. The history of business documentation. The history of business documentation is deeply tied to the evolution of commerce, trade, and written communication systems. Here's a detailed look at its development. 1. Early records in ancient civilizations, 4000 BCE, 500 CE. The earliest forms of business documentation can be traced back to ancient Mesopotamia, where the Sumerians developed the first writing system known as cuneiform around 3500 BCE. Clay tablets were used to record transactions, inventory, taxes, and trade agreements. This laid the groundwork for keeping formal records of commercial activities. Ancient Egypt also contributed to early documentation practices. Scribes used papyrus to document government policies, trade transactions, and tax records, crucial for running a centralized economy. Ancient Greece and Rome developed more sophisticated systems of documentation. Roman merchants kept ledgers, often referred to as codices, to track income and expenses, and contracts were written on tablets or scrolls to document business agreements. 2. The Middle Ages, 500 CE to 1500 CE. During the medieval period, the growth of commerce across Europe led to a more widespread use of written business records. As trade routes expanded and banking systems began to develop, merchants needed a reliable way to track debts, credits, and transactions. Double-entry bookkeeping emerged in the late 13th century in Italy, particularly in cities like Venice and Florence. The practice was formalized in 1494 by Luca Pacioli, an Italian mathematician and Franciscan friar, in his book Summa de Arithmetica. Double-entry bookkeeping became a fundamental innovation in business documentation, allowing businesses to keep accurate records of assets and liabilities. Legal documentation became more important as commercial contracts and property laws evolved. Merchants and traders kept contracts in written form to resolve disputes. 3. The Industrial Revolution, 18th to 19th century. The Industrial Revolution dramatically changed the way businesses operated, leading to the formalization of many documentation processes. Financial documentation became more sophisticated with the establishment of corporations and joint stock companies. Businesses were required to produce more comprehensive financial statements and annual reports to attract investors and comply with new regulations. The rise of railways, factories, and large-scale enterprises increased the complexity of business operations, making detailed operational and financial records essential. The development of the typewriter in the late 19th century further streamlined the process of creating business documents. 4. The 20th century, modernization of business documentation. In the 20th century, the evolution of business documentation continued with the rise of globalization, technological advancements, and stricter regulatory requirements. The introduction of accounting standards, such as GAAP, generally accepted accounting principles, created a framework for financial documentation that ensured consistency and transparency in business reporting. The establishment of labor laws and corporate governance standards also required companies to maintain meticulous employment and operational records. Computers and digital documentation revolutionized the way businesses store and manage documents. The introduction of word processing software, spreadsheets, and databases in the 1980s and 1990s made it easier to create, edit, and store business documentation electronically. 5. The 21st century, digital transformation. The 21st century has seen a massive shift toward digital business documentation, with cloud computing, automation, and data analytics playing a significant role. Digital records have replaced paper-based systems in most modern businesses, making it easier to organize, search, and secure vast amounts of data. Electronic signatures and online contracts have become common, allowing businesses to formalize agreements without physical paperwork. Compliance requirements, such as data protection regulations, e.g. GDPR, have made proper documentation and management systems more crucial than ever. Enterprise resource planning ERP systems and other digital tools now manage everything from supply chain documentation to payroll and accounting, allowing for seamless integration of business processes. Importance of business documentation in today's world. Today, business documentation is not just about recording information. It's about streamlining operations, ensuring legal compliance, and making informed decisions. Good documentation systems help businesses maintain accuracy in financial reporting and operational activities, facilitate communication across departments and with external stakeholders, ensure compliance with laws and regulations, provide transparency for shareholders, regulators, and the public, support decision-making by providing clear, organized information. In conclusion, business documentation has evolved from ancient clay tablets to sophisticated digital systems that power global commerce today. It remains a cornerstone of efficient and transparent business operations. Why business transactions should be documented. 1. Legal compliance. Documenting business transactions ensures that a company is complying with local, national, and international laws and regulations. Many legal frameworks, such as tax laws, corporate governance standards, and labor laws, require businesses to keep accurate records of their transactions. Without proper documentation, businesses could face legal penalties, fines, or even litigation. 2. Financial accuracy. Recording every transaction allows a business to track its income, expenses, assets, and liabilities accurately. This documentation helps in creating financial statements like profit and loss statements, balance sheets, and cash flow statements, which are crucial for evaluating the financial health of a business. 3. Audit and accountability. Documenting business transactions provides a clear audit trail. Auditors and stakeholders rely on this documentation to verify the accuracy of financial records. It ensures transparency and accountability in the business's operations, reducing the risk of fraud, mismanagement, or errors. 4. Tax reporting. Accurate documentation of transactions is vital for preparing tax returns. Businesses must maintain records of sales, expenses, payroll, and other financial activities to comply with tax laws and to claim deductions or credits. Without proper documentation, businesses may face issues with tax authorities, resulting in penalties or audits. 5. Operational control. Having detailed records of business transactions allows management to monitor day-to-day operations efficiently. Documentation helps track inventory, payroll, sales, and expenses, ensuring that the business is running smoothly. This information can be used to make informed decisions about pricing, staffing, procurement, and other operational aspects. 6. Evidence in disputes. In case of disputes, whether with clients, suppliers, employees, or regulators, documented transactions serve as proof. For example, if there is a disagreement about payment terms, a written contract or invoice can resolve the issue. Well-documented transactions can protect the business from legal disputes by providing clear evidence of agreements and financial dealings. 7. Business decision-making. Documenting transactions allows businesses to gather accurate data, which is crucial for making strategic decisions. Detailed records help management analyze trends, forecast future growth, and make informed choices about investments, budgeting, and cost management. Reliable documentation forms the basis for sound business planning. 8. Facilitating loans and investments. Businesses seeking loans or investments need to provide financial documents to banks or investors. Properly documented transactions show the financial stability and performance of the company, helping it secure funding. Investors and lenders look at documentation such as financial statements, tax returns, and sales records to assess the business's potential. Importance of documenting business transactions. 1. Ensuring accuracy and reliability. Documenting transactions ensures that a business's financial information is accurate and reliable. Without proper documentation, it's difficult to verify financial figures, which can lead to incorrect conclusions about the business's performance or financial condition. Reliable records make sure all data is accounted for correctly. 2. Supporting business growth. Documented transactions allow businesses to track their growth over time. By maintaining records of revenues, profits, and expenses, a business can monitor its progress, identify patterns, and make decisions to encourage future growth. Documentation helps businesses understand what works and what doesn't, aiding in scalability and expansion. 3. Building trust with stakeholders. Documenting transactions builds trust with external stakeholders like investors, creditors, customers, and suppliers. Transparent and accurate records reassure stakeholders that the business is well managed and financially sound. It shows professionalism and accountability, which is crucial for maintaining strong relationships with key partners. 4. Risk management. Documenting business transactions is a key part of risk management. By keeping accurate records, businesses can quickly identify discrepancies, manage cash flow, and avoid financial shortfalls. It also helps in tracking obligations, such as payments owed to suppliers or debts to be collected, reducing the risk of financial mismanagement. 5. Compliance with regulatory bodies. Many regulatory bodies, including tax authorities, require businesses to maintain specific documentation. Not only does this ensure compliance, but it also provides protection in case of audits or investigations. Failing to document transactions properly can lead to penalties, regulatory action, or even legal challenges. 6. Long-term record keeping. Businesses need to retain transaction records for long periods for various reasons, including tax audits, financial analysis, and historical tracking. Well-documented transactions form the foundation for long-term record keeping and ensure that the company can retrieve necessary information years down the line when required. In summary, documenting business transactions is not just a matter of convenience. It is essential for legal, financial, and operational reasons. It enhances the accuracy, reliability, and transparency of a business, ensuring its smooth operation and growth while reducing risks. In the course of conducting business, numerous documents are generated between businesses and their customers. These documents can be broadly categorized into two distinct types: external documentation and internal documentation. Each serves a specific purpose within the organizational and transactional framework, ensuring both operational efficiency and compliance with legal and regulatory standards. We will now proceed to explain each type separately, providing a deeper understanding of their roles and significance within the business environment. External documentation in business transactions. External documentation refers to the records that flow between a business and external parties, such as customers, suppliers, and service providers. These documents serve as proof of the transaction, ensuring transparency and accountability on both sides. The amount and type of documentation required vary depending on the complexity of the transaction and the parties involved. To illustrate how external documentation works, let's walk through a scenario involving the installation of a central heating system. Scenario: central heating installation. Let's consider the process of having a central heating system installed in your home, from the initial inquiry to the payment. This will help explain each type of external document generated during the transaction. 1. Inquiry. Document. The first form of external documentation is the inquiry, which is generated when you contact the central heating company. This can be done via phone or written communication, letter, email. The purpose of the inquiry is to ask for information about the installation, and it sets the process in motion. Scenario: you reach out to the company to inquire about their services, either over the phone or by sending a letter or email, requesting details about the installation process. 2. Quotation. Document. After the inquiry, the next document is the quotation. A sales engineer visits your residence to assess the job and provides a quotation that outlines the estimated cost of installing the heating system. This is a formal document detailing what the company proposes to charge for the service. Scenario: once the sales engineer visits and evaluates your home, you receive a formal quotation in writing stating the price and scope of the work to be done. 3. Acceptance and acknowledgement. Documents. If you decide to proceed, the next document is your acceptance of the quotation. You may do this by sending a letter accepting the quote or by signing a more formal sales order document. The company will then send an acknowledgement confirming that they've received your acceptance and are ready to proceed. Scenario: after reviewing the quotation, you send a letter or sign the sales order giving the company the green light. In return, you receive an acknowledgement from the company confirming that they will begin work. 4. Delivery note. Document. Once the heating system has been installed, the company staff will ask you to sign a delivery note. This serves as proof that the system has been delivered and installed to your satisfaction. Scenario: after the installation is complete, the company asks you to sign the delivery note, confirming that the installation was done properly and that you have received the system. 5. Invoice. Document. After the job is completed, the company will send you an invoice. The invoice is a formal request for payment, detailing the amount owed for the service provided. If any overcharges occur, you may later receive a credit note to correct the invoice. Scenario: you receive the invoice, which outlines the total cost of the installation and the agreed-upon payment terms. 6. Payment. Document. Once you've reviewed the invoice and the credit period has passed, you make the payment, typically by check or electronic transfer. This payment is an external transaction, and your check or payment record becomes part of the external documentation exchanged between you and the company. Scenario: after ensuring that everything is correct, you make the payment by check, completing the financial aspect of the transaction. 7. Receipt of payment. Document. Upon receiving your payment, the company ensures that the payment is processed and a record is made. Although this is primarily internal for the company, the confirmation or receipt of your payment also serves as part of the external documentation, especially for your records. Scenario: after your check is deposited, the company ensures it is recorded properly, completing the external documentation process on their side. Summary of external documentation. Starts the process. You ask for information or services. Quotation. Provides the cost estimate for the job. Acceptance and acknowledgement. You accept the quote and the company confirms receipt. Delivery note. Acknowledges completion of the service or delivery of goods. Invoice. Formal request for payment from the company. Payment. You make the payment to settle the transaction. Receipt of payment. Confirmation that your payment has been received and processed. Each of these documents plays a critical role in ensuring that both the business and the customer have a clear understanding of the services provided, the costs involved, and the terms of the transaction. In this scenario, the company must track each step through external documentation, which is essential for operational transparency, legal compliance, and customer satisfaction. Internal documentation in business transactions. Internal documentation refers to the records generated within a business to track, manage, and control its operations. These documents are crucial for maintaining smooth internal processes, ensuring that resources are properly managed, and enabling accurate reporting. While external documentation involves communication with customers or suppliers, internal documentation is used for coordination within the company. Let's continue using the example of the central heating company to explain the internal documents involved during a typical business transaction, such as installing a heating system. These documents ensure the company's internal workflow remains organized and efficient. 1. Purchase orders. Document. When the central heating company needs to buy parts or materials from other suppliers, it will generate a purchase order. This document specifies the parts required, quantities, and the agreed price with the supplier. Scenario. For example, if the heating system requires special components not in stock, the company will issue a purchase order to its supplier, initiating the internal process for ordering. 2. Inventory lists. Document. Inventory lists are used to check if all the necessary parts for the central heating system are available in stock. Each part is identified by a specific code number, allowing for efficient tracking of stock levels. Scenario. Before starting the installation, the company checks its inventory list to ensure all parts are available. If something is missing, they initiate the process to order the parts from suppliers. 3. Supplier lists. Document. A supplier list helps trace which supplier provides which parts. Each part's code number corresponds to a particular supplier, ensuring that the company knows where to source any additional materials. Scenario. If the heating system requires specific parts, the company consults its supplier list to identify the supplier responsible for providing those items, facilitating the purchasing process. 4. Staff schedules. Document. Staff schedules are used to allocate qualified engineers to various jobs. The company must ensure the right mix of staff is booked for each installation. Staff members record the actual hours they work on a timesheet for payroll purposes. Scenario. The company assigns engineers to the installation job and tracks their working hours using timesheets, which are later processed by the payroll system. 5. Goods received notes. Document. When parts ordered from suppliers are delivered, a goods received note is raised by the goods inward section to notify other departments that the materials have arrived. This document ensures that the inventory is updated and the parts are available for use. Scenario. Once the parts for the heating system arrive, the company generates a goods received note, confirming the delivery and updating its inventory records. 6. Invoices. Document. The company will receive an invoice from its supplier for the parts purchased. This invoice is used to update the company's accounting records, reflecting the amount owed to the supplier. If there is an overcharge or a return, a credit note may be issued to adjust the invoice. Scenario. After receiving the parts, the company gets an invoice from the supplier and enters the details into its accounts payable system, ensuring the amount is correctly recorded. Checks. Once the company has received the supplier's invoice, it will eventually make the payment by check or another form of payment. The check issued is documented as part of the company's payment system. Scenario. After reviewing the invoice and ensuring everything is correct, the company issues a check to the supplier as payment for the parts. 8. Expense claims. Document. Employees may incur additional expenses such as travel costs or purchasing small parts while working on a job. They will submit expense claims for reimbursement. Scenario. Engineers working on the installation may submit an expense claim for travel or other job-related costs, and the company processes these claims for reimbursement. Why internal documentation is extensive. The central heating company must deal with a significant amount of internal documentation for several key reasons. 1. Managing multiple transactions. The company handles numerous jobs at once, and each job generates a series of documents. To keep track of these, the company needs to organize and manage all documentation efficiently. This includes scheduling jobs, maintaining a record of parts used, and tracking payments. 2. Tracking payables and receivables. The company needs to maintain an accurate list of people who owe it money, customers, and those to whom it owes money, suppliers. The accounts payable system tracks outstanding bills, while the accounts receivable system monitors payments due from customers. 3. Cash flow management. It is essential for the company to ensure that it has enough cash at the right times to pay its bills, suppliers, and employees. Proper internal documentation, such as invoices and payment records, helps manage cash flow efficiently. 4. Profitability assessment. The company must continuously compare its earnings with its costs to ensure it is making a profit. Internal documentation, such as invoices, payroll records, and expense claims, provides the data necessary for this analysis. Role of the accounting system. The internal documentation generated through these transactions feeds into the company's accounting system, which serves several critical purposes. 1. Payroll system. The accounting system aggregates the hours worked by employees, recorded in timesheets, to ensure they are paid accurately. This system processes payroll for all workers involved in the installation. 2. Receivables and payables ledgers. The accounting system produces regular reports detailing who owes the company money, accounts receivable, and who the company owes money to, accounts payable. These reports help the company manage outstanding payments and obligations. 3. Cash and bank tracking. The system keeps track of the company's cash resources and bank accounts, ensuring that the company has sufficient funds available to cover expenses and payments. 4. Management reporting. At regular intervals, the accounting system generates reports that provide vital information to management. These reports summarize financial performance, helping management make informed business decisions. In conclusion, internal documentation is essential for the efficient operation of a business. It allows companies like the Central Heating Company to track resources, manage employees, ensure accurate payments, and monitor profitability. The accounting system ties all of this documentation together, ensuring that the business can operate smoothly and effectively.